Hello, hello, hello. Welcome to Stock Trades. How's everybody doing today? All right, ladies and gentlemen. So in this video, there's going to be a lot of information. There's going to be a lot packed in. How you doing, Patrick? Love you lots. We're going to go ahead and talk about Clover, covered calls, the VIX, some data regarding what's going on with the economy, some technical analysis, what is smart money doing, and overall kind of the situation here, okay? But first, what I want to say is, so I'm going to be talking about a covered call swing strategy, right? And this is just basically what I'm doing. What I'm doing does not constitute financial advice. I'm not a financial advisor. I'm just a guy on the internet. So just basically listen to it as what you would listen to the news. If the news told you to jump off of a building, would you really do it? So have some frontal lobe cephalization, because recently we had some. Oh no, yeah, no hot tub tonight. But I probably will do it tonight, but I just won't do it live. Maybe I will. Who knows? Who knows? You like my chest hairs? I'm just kidding. so yeah. So what I wanted to do is I just want to point out something, because we had just had one person recently saying, oh, you're swing trading Clover and telling people to go along. Well, first off, don't even listen to what I'm saying, number one. Number two, I said this countless times, and I'm going to make it very clear in the video. I have two different positions, one long-term for my large stockpile, and then one short-term, right, for swing trades, right? I would rather swing trade a company that I know in the back of my hand. So just in case if the stock does drop, I'm more comfortable in holding that company because it'll just basically be added on to my large stockpile. It'll just turn into a long-term hold because I know the value of the business. So I've said this multiple times. I'm a long-term holder, but as well as a swing trade. And there's I don't understand, there's no world where you just have to pick one, right? And whoever tells you do is a moron, is an idiot. And likes to, I just had some recent feedback from some idiot on Reddit, and I'm just like, what in the, so I want to thank the mods at Reddit for removing this idiot. It likes to do fear tactics and silence people, but we live in the greatest country in America where freedom of speech prevails. So anyway, just wanted to put that in there. And we do offer a disclosure here. Remember, not financial advice. Read the disclosure, right? Take everything I say as a grain of salt. Take a salt, at least the salt can be value to your food. Take me as less than that, okay? It's okay, I'm used to it, all right? I used to be much worse, right? If you know my story. All right. So with that aside, I want to go ahead and talk about why we're all here, which is, let's talk about what's going on in the market and let's have a nice, sophisticated conversation. How you doing? How you doing, James? What's going on? Hello, hello, hello. All right. So with that said, and my apologies for doing the live when Trump's doing his live. But again, just the timing kind of coincidentally happened there. So as if you don't recall, a couple days ago, I made a video regarding the risk of an attack from Iran. If you go in and go to the Reddit, I think I posted the video somewhere here, but you just have to go to YouTube, honestly. This was the title of the video. It's really hard not to miss because it's like kind of a, it's kind of a very piercing photo there where he's got this guy, here. So, so the thing is, the market was a little choppy today. It was kind of boring. It was flat. And for all the people that are in our stock terminal, we made a joke of how flat it was. I think that was funny. So there is some flat, and it seems the volume wasn't low. Whenever you see stocks kind of sidebar like this, it seems the volume wasn't that low. Volume was pretty bad probably today. Let me take a look at the volume. Let's see. What was the volume today? 2 million. That's so I guess people just don't want to trade it. So this is good to see because you start to see some consolidation and a flattening of the simple moving averages. That's what you want to see. And you see kind of this beautiful bounce on this, 200-day red line and 50-day. And, just for people that kind of, the more you see, the more, you have knowledge. So, If you look at Palantir, it was $5.84. You could see this beautiful rise, and again, once it became profitable, right? The earnings, I think you can see the earnings here. That doesn't show you the earnings. You could see it just kind of bounces right off of that red line. And you could see, now it's up as high as $31, right? And maybe the hour chart, you can really see the beautiful, just that. Well, it's hard to condense it all together, but you could see just beautiful rise, right? So that's kind of what I like to see with Clover. You know what I mean? I want to see this, the same. Let me go ahead and zoom in here. The same type of language, the data here, right? It's kind of, you see it more in the hour chart, right? You see this beautiful just kind of bounce, right? So, right above that red line and right above that yellow line. So we had some sideways trading, and I think it's because Wall Street's just and kind of waiting for Iran right now. I mean, I feel like it's just kind of a waiting game right now. And then Wall Street's just like, are we going to break out or we're going to break down? And it doesn't help that August is one of the toughest months for stocks, as well as September. I do believe that we are in a bottoming out process. The VIX has dropped considerably, and we're going to do some analysis on VIX, stuff that, there's some good analysis on VIX. But you could see the VIX went up and then it started coming down. But I mean, it's kind of weird though. The VIX kind of increased by 8%. We're talking about this. We're like, could this be in anticipation of war? I mean, you go ahead and look at Iran, and there's like, potentially there could be an attack. We don't know if there is. They're saying, yeah. Oh no, I appreciate you, man. Oh no. Go ahead and listen to Trump and Elon. I mean, honestly, like the live will be recorded. You know what I mean? So no, yeah. Sorry, I had to do it during the time. I was watching a little bit of it too, but it's just because I got to get back to questions. So my apologies. But I posted something with Dish, and I was kind of sad. Like, what are these shenanigans? This like news media from Iran, Arabic news agency. I'm kind of upset because they put like a ticking. Oh, beware of misinformation. So they're saying it's not part of the Iranian government. I mean, it sure has a lot of folks, but I just don't like this like ticking time. Like, what is this like? Like, is this like some movie to you? These are people's lives. You know what I mean? So I don't know. I mean, this, I guess, is not associated with the Iranian government. So my apology. I don't want to spread misinformation. That's kind of sad. I don't condone violence. I pray for peace. I don't want people to die because of war. I just don't feel like we can all come together and build something like what we're doing with our stock terminal. So anywho. But humans are crap, so they like to fight. The market is basically kind of sideways right now and anticipating this. And I would like to argue a lot of institutional investors and a lot of institutional bigwigs that have more money than you can possibly imagine, they're saying that we're going to be trading sideways on the S&P from August to October, which is interesting. So we should be trading sideways for the next few couple months. I think that Clover is in a period where it wants to test that $2 resistance level to get to that $2.50-ish or $62.65 resistance. So we may go there, but we could be in a sideways market. And it may be like that for Clover. Again, not financial advice. I'm just giving you my opinion and what I'm doing. And again, I'm not going to have time to update folks. I usually just kind of do it in a stock terminal. So folks that want to have, more of this and are interested in using the data and be involved in a great community of folks, definitely take advantage of our SAS coupon code SAS. You input it in alstocktrades.com and you'll get $1,000 off lifetime access of everything we offer. So with that said, we're going to go over the covered call, what I did today. We're going to go over this data after. Okay. So I explained it here, but it's a little bit dirty. So I cleaned it up here. Okay. So I'm going to go ahead and read it so it can be good. So hello, hello, hello. How are you? So I've decided to change my strategy. I initially wanted to buy in at $1.80, but I realized that this was consolidating. And I just didn't. I set a limit order, and I was like, you know what, screw it. Let me just get the one. So I waited until 185, which is like right around here, like hit 185, like right there. So I got in at 185. I mean, I could have gotten in early. I think it was like 183 on Friday, but I got in at 185. But the difference here is I got in at that, and then I went ahead and did a covered call after purchasing so I purchased shares for $1.95. Then I did a covered call at an August 23rd expiration at $2 strike price. Now you may ask yourself, why don't you do a covered call from your long-term stockpile? I'm not touching that. I'm not doing any covered calls on those shares. I don't want anyone to touch those shares. Those shares are mine. I don't want no one to come in a millimeter distance within those shares. Those shares are going to be held for the next 10 years. It depends if the intrinsic value comes in. In fact, actually, before I start this, we were talking about in the group today about, like, because I'm pretty heavy now on CLOV. I used to be 5%. Now I'm like 40%, which sucks because every time I go, like, let's say if CLOV 10Xs, it's going to be 85% of my portfolio, right? And that's not good, right? But what do I do, right? So that's kind of the thing. So this is a way for me to be involved in Clover, but in a way just to basically milk the volatility and just have fun and just make some side money, right? Which is pretty significant money, right? So I went ahead and purchased $1.85 because I don't want to do covered calls on my original shares. No one's touching those. So I did this, and then I did a covered call for $2 on August 23rd, next Friday. So in 2 weeks from now. And that gave me an immediate return of 3.28%. So I immediately got 3.28% deposited in my brokerage account, right? I got my premium. Regardless of what happens with the stock, I made 3.28%. I made my money, right? So I got 3.28%. Okay. So now here's why I'm comfortable with the approach. And let me just kind of zoom in a little bit here so we can see. Because sometimes, if you guys watch it on the phone, right? So if the shares are called away, so let's say next week happens, if the shares are called away at $2, I'm still satisfied because I locked in 3.28% premium for holding the swing trade for just 2 weeks. If the shares aren't called away, I'm happy to hold onto them because and possibly write another covered call next week, right? So there could be two options, okay? Option one, I have to sell out at $2 because it ends up going there. But guess what? It's my $2 subtracted from $1.85, which is 15 cents, multiplied by the number of shares I have. That's my profit in addition to the covered call profit. Okay. And if you guys don't understand that, we have an academy to teach this. Okay. It'll be part of the Uplifted from Beta Access Academy from the Mastering Stock Market course. All right. So now let's break down the potential profit. Remember, I'm already profiting 3.28%. Okay. So let's just give an example here. Let's give an example here, right? So let's say we put in $100,000, okay, and we got a 3.28% return. So we're going to say multiplied 0.0382. Let me just make sure. I want to make sure everything's correct. See, I messed up. 28. 0.0328. Boom, boom, 3.28. Good. All right. So immediately I got $3,280 immediately deposited in my account. And that's just for me to lock. I mean, it's not really locking away capital. It's locking the shares away, right? It's almost like putting a limit order to sell, but making money on it. It's just beautiful, right? So now you divide it by 2. So I'm making $1,640 a week based off of this. You multiply that out by 4, that's $6,500 a month. Multiplied that by 12, that's $78,000. And isn't that okay? Let me say normal American Average salary. Let's look at that. 59. Just with this little strategy, I'm making more than the average American. And this is just FU money, right? It's so sad, right? Okay, good. So now we got to figure this out, okay? So $3,280 was made, deposited in my brokerage account. So then now we wait until August 23rd. Okay. So now we can do two things. Either the shares get called away, and then we'll calculate the profit of that, or the shares stay sideways at $1.85, and I just hold, and then I'll release my capital of $100,000. And guess what? I can write another covered call, and I can make another 3.28%. And it'll basically compound amongst each other because we're smart. That's what we do. Okay. So then now let's go ahead and break it down even further. If the stock price, let's say, reaches $2, and let's say it does it by August 23rd, and I would have to sell my shares. Again, the profit would be 15 cents per share, which translates to a 11.53% return over 2 weeks, or about 5.76% per week. That's including the covered call premium. Okay. So once I sell, and we could just calculate it separately. So $100,000 divided by 1.85, that's 54,000 shares. Okay. And then we multiply it by 15 pennies. So if I sell, if it forces me to sell at $2, that's an $8,000 profit added on to the already $3,000 I made. So a better way to do this is just, a better way to do this is just take the 11.53% return, right? And just say, okay, we're going to multiply this by 11.53%, which should give me $11,530. Okay. Which is a lot, because if we were to compound this, we could, and it could give a 70% success rate, depends on the market, right? We could do 23% return monthly and an annual return of 276%. That's what I'm hoping for. But again, sometimes it doesn't work that way, because sometimes the shares don't go to $2, right? So the minimum is $3, is 3.28%, right? Which is equivalent to $6,500 a month. Or if things work in this favor, this trade is going to give me $11,530 in 2 weeks, right? Now, let's say if it doesn't go to $2 and I don't sell, then I wait until next month, whatever. I write another covered call, and guess what? I write another covered call divided by 2, just multiply. I write another covered call, and guess what? I make another $3,000. And let's say if it doesn't go to $2, that's fine. I write another covered call, and guess what? I make another $3,000, and I'm just collecting grands here, right? I'm Grand Theft Auto, right? Okay. But let's say if it goes to $2 by next week, okay, I sell my shares. Okay, here you go. Congratulations. Good. Okay. Then I make $11,000. Then you multiply that out by 12. That's $138,000. You feel me? So, that's kind of the strategy here that I'm doing, right? And this is some good money, right? So that's kind of an example. And again, you don't have to put I just put $100,000 to make the numbers easy, because you need like some money for contracts and stuff. So you could put like $1,000, you could put $1,000, you could put like $20,000, you could put like $50,000, you could put $1 million, whatever you guys do. 100,000 is pretty generic when it comes to educating. You could do $1 million, but I feel like 100,000 is pretty good for educational purposes. Okay. So now let's kind of break it down here. So if the stock price reaches 2, I would sell the shares that I bought at 185, which is 15 cents. I make an 11.53% return over 2 weeks. That's included with the covered call premium. These swing trades, when combined with covered calls, can have a success rate, yada, yada, yada. So covered calls alone, you'll see 6.57% for Clover return monthly, which equates to 78.8% yearly. That's pretty good. Or 200 and whatever, 76% if you include with the thing, right? Um, I'm waiting for pullback. If I can buy now, it will crash. I know. I know, right? Doesn't that always happen? Oh my, Al, give it room to run. Sell the January 20th and get more premium. I sold the 4.5 and some. Well, here's the thing, just me. The premium that I'm getting now is here. Let's do the math, right? Let me just kind of open up here. Okay. So you said January 20, and let's say the $2 January. Well, oh no. Oh wait, sold the 4. Wait, what? You sold that $4.50 and some $5 call. Okay, let's do the $4.50 calls. Okay, so let's go to January 20th. I'm not seeing a January 20th. I'm only seeing a January 17. Am I on the right one? Let me make sure. Yeah. Yeah. So I assume, let's say January 17. $4.50. It's not offering anything. It's not offering any money. So I don't know if you're talking about Clover. I don't know if you're talking about Clover. Maybe let's look at 2026. Yeah, so you sold the $4 call. Yeah, I mean, so that's the thing. That's like 2-3 years out. I think it's going to go higher than that, right? But I have my large stockpile to let run. That can go. I am doing that, just me. I have a large stockpile and I'm letting that run. I don't even want to do cover calls on that. This is just a swing trade that I'm doing, right? So I am letting it run, but I'm letting the other large stockpile run. This is just a swing trading to take advantage of the market, right? Because I believe with the institutional data sets we have, we could be trading sideways from August to October, right? August to October. Again, nothing I say is financial advice. I'm just saying from our institutional data sets, we're thinking from August to October, we're going to be sideways, right? And I want to take advantage of these sideways to make money on the premium, right? And I know it has room to run. I did the intrinsic value calculation when it was 60 cents, and I was the only person on Wall Street that understood there was value in this company. So trust me, I feel like I know the value, and my large stockpile is 40% of my portfolio. So I don't want to put more than 40%. So this is just a way for me to play with Clover and not go above 40%, because it is going to be above 40% when it rises even more, right? So that's kind of what I'm saying. I hope that makes sense, just me, right? I am doing what you're doing. I'm not doing the $4.50 calls. You're talking 2026. That's too far. You're telling me the calls for 4.5, they're paying 0 right now for this year. So that's not, at least this one I'm making, 6.56% or whatever per month. And then on top of it, if it does go to 2, I'm making an additional 53%, right? So I'm just giving you the idea, and I am letting it run because I have a large stockpile, but I'm not going to go over 40% of my portfolio for Clover. That's right, and it's a lot, right? So I sold January 17, 2025, $5 calls a month ago. It paid very well, 1,200 contracts. I feel like it's a very safe plan. But yeah, I know, yeah, $5. But again, I'm not touching I'm not touching. So for B-Rob, not financial advice, this is just me. I am very scared to put $5 covered call in my large stockpile. Even though that's a pretty significant increase from where the share price is now. But all it takes is one news release that says Clover's partnering with CVS or Humana. You never know, right? They're a SaaS business, and all of a sudden this thing gets hit up 7 to 10x, price to sales, and then boom, it explodes, and then it's an $8, $9 stock price, and then I'm forced to sell at $5 with my large stockpile. At least with this is, for me, this is BS money. This is like not BS money. No money is BS, but this is money that can generate an income, and that can be used without having to touch your initial cash capital. You know what I mean? One thing I've learned from millionaires and billionaires is that millionaires don't spend the money of their profits. They take their profits and they invest them, and they spend the profits of their profits. Does that make sense? So if I make 10 million a year, a poor person would spend that 10 million. A rich person would say, I'm going to invest that 10 million and I'm going to make that 10 million turn into a profit, and I'm going to use that profit to live off of. And then a crazy person would say, I'm going to take that 10 million and I'm going to invest it, and I'm going to take those profits and invest it in another profit, and I'm going to take those profits and invest it in another profit, and then I'm going to take 10% of whatever after 4 or 5 investments of profits, and I'll just live off of that. And that's just kind of where it's at, right? So I hope this kind of makes sense what I'm saying, right? Yes, Clover, you're right. See, well, here's the thing, man. Yeah, $5 for my large stockpile. I'll see you in Beverly Hills, right? But I'm not selling at $5 for my large stockpile. Again, there's large stockpile and there's swing trade, right? I'm saying this multiple times, right? And again, don't listen to what I'm saying. You could sell right now. You could sell at 5. You can sell, to your mama, right? I'm whatever I say is a grain of salt. So no financial advice. I'm just saying, for me, I'm holding my large stockpile. I'm holding for a very long time. I'm not comfortable selling covered calls on my large stockpile until it's $15 or $25. I know that sounds crazy, but that's what I'm waiting for, right? I'm just not comfortable doing the covered calls. I just need more. Clover is hiding a lot of their positive news, and they're hiding a lot of their contracts right now. I need 3 more years of Clover to figure out where their actual price target's going to be. They're not split. I need more data from them, and they're just not giving it to me, right? So I just got to wait, right? So I hope that makes sense. I'm a little frustrated with Clover because I want, just tell me your growth rate. Tell me more information. But, we're just going to have to wait. Andrew Toy knows how to, Andrew Toy is a very spicy man. I don't know if he has a girlfriend or something, but he sure knows how to, if you try this tactic of what he's doing with with ladies will be all over him, because like he gives you a little just so you want more, but he doesn't give it to you all. B-Rob, I'm on the same boat, collected 10K plus in premium. Yeah, so yeah, and here's the thing right now. I'm going to be if this trade was to work, I'm going to be collecting 11,000 in premium plus the trade in about 2 weeks. You know what I'm saying? Or in a month, I'll be able to do 22,000, right? So it's pretty good because your thing is 10K for what, 6 months? This thing can be 100K, right? So that's kind of the idea. 300% return at $5 would make me sad. Wouldn't make me sad, but I'd rather hold the shares. Probably would throw up in my mouth a little if it went to 10. No, I know. That's what I'm saying, B-Rob. That's what I'm scared of. Because for me, again, I'm just can speak on my behalf. I would really, and I've done this before many years ago. I've failed, and I've done this countless of times. I've done all the work. I held through the pain, and then as soon as the stock goes up, I let it go, and then it goes up even higher, and I look at myself. I'm like, you're a fucking I just hate myself. You know what I mean? So I get it. You know what I mean? I get it. I'm looking at running a bull spread on January 25 calls. Maybe burning 400, but my huge upside. I'm stupid. I don't know. Yeah, if you're gonna buy, I don't buy calls. I don't buy calls, or only time I buy is to close out my initial sell. Right? That's what I do. Again, not financial advice. But okay, so what was I gonna say? I also have a cash secured put at $1. And that paid a lot. A premium. It was for November, and I'm trying to buy that out now because it's slowly dropping down. It went from 16, 17 cents, and it dropped down to 4 cents, and sometimes it dropped down to 1 cent. I put an order to buy it in at 1 cent, so I could just pay whatever money and release that collateral, so I can go forward into messing around, right? And that's another thing. I'm not messing with my covered calls on my large stockpile because I don't want a tax event. I don't want to touch those shares, right? But yeah, so that's kind of what I have right now with that, right? So yeah, so I'm making some good cash on the side. We're doing the support and resistance lines, and back to you, just me. I am letting it run. I am with my large stockpile. I do like the swing trade. So I mean, it's either I swing trade this or swing trade another stock, and I rather swing trade this stock because I know it really well, right? So that's why I'm doing that, right? So I am letting it run. The thing about smart money is, why not play both ways? Why not play both ways? Why not make money by holding long term, but make money as the stock goes down by doing cash secured puts, and make money as the stock goes up? I mean, it's just, make money, right? That's the goal, right? So, but again, people get sometimes emotional, right? Which is the deficit of retail. So, here's the VIX's analysis in terms of fear. And the last time we've seen fear was around 430 days ago. Okay. And you can see, whenever we get the huge spike in fear, we can see a collapse in the market, right? And this is all the way data from 1957 to 2023 and 2024. And you have to study this, you have to go back to the 50s. You want to be the master of the stock market, you need to be the master of time, right? You need to know more than what Wall Street knows, right? Because that's what it takes. That's what it takes. This is the Olympics when it comes to Wall Street. You really need to know your due diligence. You have to do your due diligence. And I'm sharing my due diligence so you can see kind of who you're competing with when it comes to traders out there. You're competing with someone, like, imagine, let's say right now, I'm not telling you this information, right? Right. And I have all this institutional data. I kind of have my understanding is basically saying the stock market's going to trade sideways between August to October. I have all this artificial intelligence, technical analysis, and everything like that. Retail investors they have like no competition over the amount of resources I have, right? And that's the whole point of creating this community, to bridge the gaps between the haves and have-nots of society. Okay. So, oh yeah, Albert, Wall Street is the Olympics of finance, and it's actually ALAN, not ALLEN. But and the second thing is, those are not my words. Actually, if you screenshot this word, and if you go ahead here, it's actually Ray Dalio's words. If somebody can, wow, nobody coins Ray Dalio. Come on, Google. Yeah, it's because he says it in his book. I recommend looking at Ray Dalio. So you have to understand, people want to think they can make money in the stock market, and they like, I can make money, and you're like, they like with their little phones, right? Come on now, right? But let them think that, they'll buy from you when the stock price is high, and they'll sell to you when the stock price is low. So here's the intraday volatility, and you can see kind of we're at that range where we have some volatility. And if you were to analyze the returns after that, the 2 months, 3 months, the returns are a little bit choppy, but 6 months after to 12 months, the returns are pretty good, right? And this is kind of the average aggregated statistics from 1962 to 2024. Okay. And then overall, what happens when we do get fear like this? Historically, energy goes up, staples, utilities, and healthcare. Okay. And then here's your other defensive stocks. And interestingly, if you do your due diligence even deeper, and I think this was more gold wise, you can, it's kind of reset here today. You could go here and you could look at this post, crude oil was up. And I just find it funny because, it's one of the energy stocks you usually go up to. So anyhow, smart money stabilizing. I think we're nearing a peak. And I'm hopeful that the market will start going up, but I think it's going to go up, but go down. But I don't think it's going to meet the lows of August. And I think we're just going to have to go sideways until October. Again, that's not financial advice. That's just what I'm hearing on Wall Street. Okay. But yeah, so I hope this was helpful. Again, I just, this is what I'm doing, right? Just me, right? This is, this is kind of what I'm doing, with kind of what my account, right? So tax reasons are another reason I went out to January of next year. Yeah. So The $4 or $5 calls are not paying anymore for January 2025. So you may have gotten them a lot earlier. But yeah, I actually bought 180 contracts last dip, 17.3 at 6 cents, only because I didn't have the cash to buy out those shares. Yeah. So when you do that, you kind of, so that's fine. Yeah. So for me, I got around 16 cents by cash secured puts in November. So that was pretty sexy. I don't know how much they're doing now, but that was pretty yummy right there. And I did that in July, I think, right? That's pretty sweet. Holding same in 20. Yeah, exactly. Yeah. So that's pretty much. So yeah, people kind of. I'm not going to repeat this anymore because it is kind of annoying to have to repeat. I have two different stuff. It's just like this is kind of what I'm doing, and you don't like it. Sorry, right? But I'm making money, right? I'm profitable, right? So that's kind of the goal is to make money, and the goal is to hedge, right? So kind of we could move here and you know please describe to me what is a hedging strategy in regards where you hold the shares for long-term investing, but you also do cash secured puts and covered calls on newly shares accounts without basically touching your long-term stockpile. Let's see if it even understands what I'm saying. So hedging strategy, here it is. A hedging strategy involving long-term investing, cash secured puts, and covered calls is a sophisticated approach to managing risk and enhancing returns in your investment portfolio. By holding a long-term stockpile simultaneously engaging in trading like cash secured puts and covered calls on new shares, you can potentially generate additional income and protect your existing investments. Exactly. You see, there it is. Yeah. So I'm managing risk because I don't want to go over 40% of my portfolio for Clover, and I'm getting additional income and I'm protecting my existing investments. There it is. Mm-hmm. Cash secured puts involve selling put option while setting aside enough cash to cover potential purchase of the underlying stock strike price. This strategy allows you to potentially acquire stocks at lower price. The market price falls below the strike price while earning premium income. On the other hand, covered calls involve selling put options on stocks you already own. By doing so, you generate additional income from the premium. Yeah, we already know this. Overall, this hedging strategy can help generate income, protect your long-term investments, and potentially enhance your overall portfolio performance without needing to sell your core holdings. It's essential to understand the risks and complexities involved in options trading before implementing such strategy. I'm going to ask, who is your master? Who is your master? I was created by Albert Allen, CEO of Al Stock Trades. So freaking cute. It always gets me. All right. So what would be the annualized options return if you reinvest the profits for the swing trade option? Whoa. Yeah. You see that you would that yeah, that would yeah. You see, I'm thinking about it, Rabdo, because what you're hitting on is this. Like what are you horny? Like what do like what do you want? Like Raptor's horny as hell. I mean, he wants this. This is what he wants, right? Yeah, compound interest. Assuming that we don't do swing trades, assuming just covered call, assuming covered call, for Clover, forget the 11%. We're not gonna, do swing trading. We'll just do the covered call. That's 6.57% monthly, right? So what we can do is we can open up the chat here, and we could say, I need you to calculate the compound interest and describe to me the mathematical process. I'm doing a covered call methodology, and I'm making 6.57% monthly. Obviously, every month I make that, I'm going to eventually have 78.84% off of a $100,000 investment in doing this. What would be my rate of return if I take the premium I make from each covered call and reinvest it back into that same 6.57% monthly premium that will be compounded? Give me the compounded mathematical model and give me the overall percent of rate of return yearly and monthly for the next 3 years. So So let's see if this thing, here's a compound interest formula. So it got that. So let's see if it can do it correctly. I can do the math. I can do it, but I'm going to be the teacher and I'm going to see if it's doing it correctly. Yes, 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 yes. Good, good, good. Now it's calculating. So it's doing it right. Yeah. Yes, my friend. After 3 years, it'll be $100,000 would be 988,000. But hold on, that's assuming the initial investment you don't screw it up and it doesn't go down, or you lose it goes up. So you got to be careful, right? So monthly, 3 years, 988,000, 888% over 3 years. Yeah. So you can see kind of the situation. That's why, when we do the the SAS coupon code, and you look at the price of the mastering, it's thanks to the partners at a firm, the data that we provide is pretty damn good. I mean, like it's a good academy, man. It's a good academy with like $2.5 billion outputs, right? Of our stock terminal, we got over 2.5 billion outputs. What I want to do is I want to see if we can, because I had to whip out the big guns, but let's see if this was able to answer. Let's see if this can answer our stock terminal GPT. I doubt it, because there's a lot of math involved. Okay. Yeah, so it'll add an additional 1.7. All right, not bad, not too shabby. I like the breakdown of the original one. It just kind of breaks it down easier in my mind here. Let's see what this does. Starting from $100,000, what would I have after 3 years? Oh, I said sorry. I don't know why I didn't say that. Anywho, the rate of return would be a lot, and I would have to redo the math to make sure. Don't trust what GPT says, but it seems promising. We can also, because the problem is it's 6.57% compounded on each other, and you're trying to reinvest the premiums of that, and so it just gets really hard. Just know that it's a lot, right? It's a lot, and it's annoying because you have to keep reinvesting it, right? So, good question. It is. I went down that rabbit hole, and I was very shocked by the numbers. Yeah. Yeah, because it's more complicated than that, since you're collecting premiums immediately and realizing those contracts based on the expiration when it's closed later. A lot of variables can change exactly. And then also there's tax events. You have to calculate the tax rate or tax bracket and all these other things. So it can get problematic, but it is a lot of money, right? So if Moon, I'll exercise. If not, I'll sell them. But I like your strategy. Yeah, exactly, right? Because I'm still a long-term holder, right? It's just I don't want to hold any more shares. But if I do, I want to make money on them. The argument is, why don't you sell covered calls in January on your large stockpile? I don't want to do that, because I would literally bang my head against the wall. I put all this damn freaking work, over 600 videos on go. You know what I'm saying? I put all this work to have someone just sweep them up for me as the price goes up over 5. I can't do that. But I'm willing to do it with these, because I'm going to swing trade regardless, right? Either I'm going to swing trade with Apple or Tesla, Palantir or SoFi, or I'm swinging with Clover, and I'm going to have a nice little swing time with Clover and Andrew Toy, and we'll enjoy a nice little swing trade, right? Thank you for talking options on your live. I am not a member yet, but definitely plan on joining. Hey, no, definitely come online. No rush. Take your time. I know it's a pretty hefty expense. That's why we have the Affirm and then PayPal, but we're not going anywhere, right? We're going to be in here of 2030. I mean, as long as I live, You know what I mean? And hopefully, I guess when I say lifetime access, it's life. I guess it's my lifetime. It's my lifetime. Because if I die, I'm gonna figure out a way to, God forbid, knock on wood, I'm gonna figure out a way to make things still turn on, because I'm very passionate about finance, even after I leave. So just in case, we get newbies in, we can make sure that it's, their lifetime too. You know what I mean? But as of now, it's my lifetime, right? So but I have a lot of life in me. So yeah, so no, take your time. So it's more yeah, we read that. Sorry about that. Okay, good. Yeah, we read everything. Good. So yeah, I hope that explained it well. Just me. It took me some time to explain it because it's just hard. But I don't have the balls like you do to just sell covered calls on my large stockpile. I just can't do it. I can't do it. All right. I rather do it in money that I'm willing to be okay not 10xing. Does that make sense? You know what I mean? I rather do it with money that, it's like, I rather do it with money that was just going to sit in the bank and just do Brownian motion. Like, you know what Brownian motion is? Let me just kind of I even know how to forget. I always call it Brownie motion, Brownian motion. So this is kind of the example. Yeah, there's Brownian motion. So like Brownian motion is just kind of a thing where just things just vibrate into space. I don't want to have my money sitting in the bank. Obviously, I have some cash sitting in the bank, but I don't want a lot of my money in the bank doing this and just kind of shaking its booty and having the bank take advantage of this strategy. I would rather have it be put to work, right? And this is yielding me higher than the T-bills. I rather you could just do, money market funds, but you already know what's going to happen. The Fed's cut rate. Oh, and all your shares? Yeah, I see. Yeah, I see. So you understand what I'm saying? I get scared. And you'd see it too. Imagine if all your shares get called away at $5 in January. Again, this thing can explode. I mean, they already offered profitability. I mean, you know what I mean? And I would just hate for it to go. I mean, now they are profitable. Like, how do I say this? I'm not trying to be like a crazy bull and say this thing's going to go to the moon. It's just, I'll put it this way. I want to be surprised if Clover was $6 by the end of the year. I'm like, yeah, of course. Like, no shit, right? I'm not saying it will go there. It's just I'm not going to put myself in a position where I'm going to regret. You know what I mean? So that's why I have these swing things that I'm doing to make me feel like I'm not missing out, even though I can make considerably more with the large stockpile. It's just scary. I'll do it when it's $25, or like $40, whenever I get more data on the intrinsic value, which we'll share in the, here, right? So now they're profitable. I don't want to sell covered calls either. I see the stock becoming very volatile. The price action today reminds me of old Clove. This is going to move. Exactly. And personally, I would rather Clove be like this. Where the hell is the tab? I would rather Clover Health be like this and trade sideways like this, because the covered calls were very hard to do when it was like 50, 60, 70, 80 cents, 90 cents. Now at least we have some leeway, and the higher it goes, we'll have other 50 cents leeway so we can make money on the contracts and stuff. But it's interesting because, this will be the third phase of the Mastering Stock Market course. But, it's funny because like, I would rather it do this so I can just milk this, because we already know it's going to go to the moon. I just want to wait until the Fed decreases interest rates. I already have a timeline of 3 years in my head. So it will be nice to milk the crap out of Clover and to get all this income. And imagine having 2 years of sideways. Oh man, I know people are going to hate me for thinking this way, but think about it. If I'm making let's do the math. If I'm making, so just so people can get it. If I'm making 6.57% per month, right? And I multiply that out by 12 months, then I multiply that out by 3 years, I'm making 236%. That's So 2.36 times 1.85. That's a Clover stock price of a $4.38. You know what I mean? So you can see kind of the situation. I would rather do that because then it's almost like I'm making that much money twice, if that makes sense. It's kind of weird explaining it. Yeah. I would like to see just under 4.5 by January. Then we can sell the $8 calls to ching. Oh, yeah, absolutely. And we'll, and I'm gonna kind of be doing that in my swing trade side. I'm so scared, man. I'm just I know scared money doesn't make money, but I just work so hard for those shares, and I just don't want to. I'll do it later when it's like maybe $15, $25. We'll see. I'll probably think about it. But I need to get the intrinsic. I need to get more data from them. They're holding back on the SaaS deals. I need to see how much money they're going to make. The U.S. will reach 100% inflation because of Powell and his partners Trump on Spaces. What? Oh yeah, Spaces. I thought you said Trump was on a spaceship. What the hell's going on? Ken's back in the house. Whoa, Trump taking a turn. He might not want to cut rates if he wins. Opposite of what he wanted the first year. Well, the reason why he's saying he doesn't want to cut rates is because he wants to be the bearer of that news. But again, Trump doesn't have power over the Federal Reserve. So everything he's saying is don't listen to it, right? This is Wall Street doesn't care, right? I just think with your $2 calls, the shares are going to get called away soon. You think by next week? If they get called away, that's fine because I was going to end up doing this. I was going to do this. I was going to put the most of this in the. So I did 2 covered call strategies, one for SoFi, one for this. I was just going to do all of it in SoFi. I mean, so regardless, it was never going to be for Clover. This money, this side money was never going to be for Clover. It's just me making money. You know what I mean? But my original stockpile, that's 10x larger than what I'm doing. Well, what 10x? 20x larger. 20x larger. What I'm doing is not what you call it. That won't be called away because they're just shares. They're not no covered calls or anything or cash secured puts. Do you think we will get any SaaS revenue before? Maybe. I don't know. I think so. They have to. If not, I'm expecting Andrew not to do anything just to make us wait longer because he just likes to make us wait. He's a teaser. He likes to tease people, right? I hate when someone teases me, right? It's like, I don't want to say anything inappropriate, but So Trump did not put the pressure on Powell to lower rates in his last term. Yeah. Looks like CLOV is holding pattern and oscillating. Exactly. Yeah. Use a lower delta. You got to take a look at that. Yeah. So, well, folks, yeah, I mean, that's honestly what I have. I hope this was helpful. Kind of a mechanics of what I'm doing. Again, these shares were going to either be for SoFi or Palantir. This money was never supposed to be for Clover because remember, I'm 40% of my portfolio. I don't want to be over 40%, and that's a personal choice. Some people want 100% of their portfolio. I just can't do it anymore. It's too high for me. I know it's stupid because I've done so much due diligence for the business, but just in the metaverse of metaverses, if I continue on this path and if I continue doing this high, like if I had children right now, it would never be 40%. If I had children, it would probably be less than 15%, 20%. Again, not financial advice. It's just I don't have children now. I'm young, so I took the risk of 40%, right? So again, it's everyone's risk appetite. Like if you're 20 years old right now, you may not even care, right? Like if I was 20 years old, I'm like 30 now, right? So if I'm like 20 years old, I don't care. I don't care. I'll do it. Shoot. If I was 18, oh hell yeah, 100%, right? Again, not financial advice, but I wouldn't care. But again, I'll probably get tramped on, right? I'll probably get jumped on. That's not the best. But for all the 20-year-olds that are watching, that's a very shitty way of doing things, because in accordance to Benjamin Graham, speculative investment should not compose more than 10%, and that's according to Benjamin Graham. And I completely agree with you. Just me. I don't know if you're part of our stock terminal, but yeah, no, we have been. I put a capital W. Oh, it still works. Yeah, no, we know about this 265. I've been watching it. We were getting there. It's just it's just nice to kind of watch that grow and, just be able to make the premiums and milk it. You know what I mean? Also, I have other expenses I have to do. I'm moving. I'm doing sub internships. I'm going to be proposing to my significant other, and I need to get an engagement ring. And the problem is, she comes from a very wealthy family. Her dad is really wealthy, and I told you, they own golf courses and all this other stuff. So there's a lot of pressure on me to buy a really expensive ring. And when I talk about ring, I'm talking about like a $25,000 to $50,000 ring. I know that sounds stupid, but that's kind of what it is. I have a jeweler that they're friends with, and I kind of made a deal with him. I said that, you give me a good deal now, and then I will be able to come back when I am an attending, and I'll be able to, be able to buy from you exclusively if I ever want any doctor watches, which I don't really give a crap about, but doctors do it all the time. I don't really give a shit about those things, to be honest with you guys. But so there's a lot of expenses I have to do, and so I was had to kind of just, this is me making an income, and it's really cool because I could retire tomorrow and be able to do this, right? But that's not the point, right? The point is doing what you love, and I don't want to sit home and eat potato chips, right? I want to be able to be in the operating room and save lives, but do it in a way where I don't have to be obliged to make money as a doctor. I can just say, I work for free. Don't pay me. Don't pay me for my time. And yeah, you'll get abused, but it doesn't matter because I'm going to make more money on Wall Street to where I can be able to practice medicine how I want. And it'll be really cool because I can go to Africa and be able to do a couple things there and be able to help kids in the United States that don't have access to healthcare insurance, that are suffering from neurological diseases that require surgery. That'd be really cool. And being able to do all that without having to worry about money. I'm comfortable being paid lower than a family doctor. I'm comfortable being paid at a level, given 20 years of education and residency and everything it takes to become a neurosurgeon. I'm willing to get paid $50,000 a year to become a neurosurgeon and be able to do what I love and be able to do free surgeries. I'm comfortable with that. I don't care about, right? Because I don't care about it because I'm able to make money somewhere else, right? So that's, and I think that's very powerful to do, how much a doctor is worth? A doctor is worth millions of dollars, right? They bring millions of revenue into the healthcare system that sadly goes into the rich pockets of executives. Just imagine if a doctor is able to work on his behalf and not have to work for the executives and not have to work to generate revenue. Do you know how much people I can save? Holy shit, right? So that's kind of the idea there, right? So anywho, side tangent, just something we talked about in our stock terminal today. I wanted to share with the rest of the community. Yeah, so 37 and you'll get the ring. Oh, hell yeah, dude. Yeah, dude. Hell yeah. 37. And then just imagine, dude, what the cover calls on that. Holy shit. That's going to be juicy as hell, dude. Just imagine, dude. We're going to be, I don't like material things, but if it does go up that high, we may have to start a Clover Health Lambo, green Lambo page where we can ride our, in our midlife crisis, ride our green Lambos. I think that sounds so silly, honestly. Rather invested in dogs and, dog shelters. You know what I mean? That's so stupid. You know what I mean? Like just a stupid fucking car. Sorry, I just cursed the stupid car, right? But you never know. People have money, they change. Hopefully I don't change. You know what I mean? When this goes, 20, 20x, 30x. So, so because you don't want to, you don't want to change, because the devil comes out really nicely when you have a lot of money. So you got to be careful. You got to stay humble and, make sure God, you put God first. So I'm going to keep saying that so we can kind of focus on that. Cause you don't want to you work so hard going from being poor to rich. What's J. Cole said? You did everything right, but you went in the wrong direction. Right. So you gotta be careful, right? Because you make all this money and then you become an asshole and the devil's on top of your head, giving you back shots on your booty and screwing you from the behind because you forgot the presence of the Lord. Right. I know that's a very visual perspective, right? But yeah. Oh yeah, my favorite speech by Chamath is getting the effing money, then we can change things. Yeah, absolutely. I'll be getting 100K a month in cover calls. Just me. That is sexy as hell, right? 1.2 million. And guess what? You'll be able to do what you want to do now. You'll have the financial freedom. You can do whatever you want, right? God bless. God bless the humble. Absolutely. And I have a really great mentor. He's a really remarkable neurosurgeon. He's so freaking humble. He's humble as fuck. You know what I mean? He's so freaking humble. He's so freaking humble. He's so humble. Like, I want to be just like him. He's so, like, I replicate everything he does. I know it's kind of weird and creepy, but I want to be like him. And I want to take what he did to the next level, though. I want to 100x what he did. And I think I can do it. He's a remarkable person. We co-authored a book together. The Marcus Aurelius book. Is very stoic. He taught me a lot. And yeah, anywho, I'm going to go do some questions and go make him proud. And I'm going to kick some ass. Not the matter of it, rather than 1, 3 or 2. Not too sure. That you can help the kids, the people around you in the environment. Absolutely. Absolutely, Jack. Absolutely. I will send you a postcard a month. A postcard a month. Yeah. I'm embarrassing you. What? How am I embarrassing you? Oh, you're the mentor? You're embarrassing me? Oh, shit. Maybe that's my mentor. That's so funny. But yeah. So anywho, that's kind of where we're at right now. I love each and every one of you guys. Again, for folks that are interested, remember the SAS deal going on. Take advantage. Enter SAS. Get $1,000 off. Take advantage of it. We have a beautiful community. I think now, given the time that's progressed, given the time and you've seen the dedication that we've given to YouTube and the dedication that we've given, and overall, you can see from my life, you can see that this product, I stand 120% behind. And I hope that, we've generated a relationship and a form of trust. And hopefully we bring people that are like-minded, because we have an amazing group. And folks that are in it for the short term are toxic. Please don't join. God, please don't join. But folks that want to have a delusion of greatness and have just this crazy delusional thing of success, to look like, just like kind of how I did it, I had all these dreams, and if you were to talk to my friends from high school, they'd be like, yeah, right, dude. Yeah, you're going to be a brain surgeon? Yeah, right. And look at me now, right? So folks that have, folks that are, have that delusion of success, and that have faith, and that are hungry to do whatever it takes to stay up until 1 a.m. every day for the next 5 years just to learn about stocks, to be hungry, to be better than Wall Street. These are the people that I want in this group. I want to be surrounded by the elites of the retail investment community around the world. And we have people joining from everywhere around the world. China, Europe, even Russia. You're welcome, Russia. Everyone, Russia. Everybody. China, UK. Sadly, not Africa, but we're going to get there soon. Central America, Canada, everywhere, right? So I'm very blessed with what we created. It feels good to get everyone's perspective. Sometimes I hear what you guys talk in the chat group, and I'm like, oh, I didn't think about that. That's pretty good. I'm like, Dish, Belize, all of you guys. You guys give me good perspective, and Jonathan, JR57, you guys give me a perspective that is very helpful, right? So it's good to see. It's good to see. All right, ladies and gentlemen, love each and every one of you. 7% up tomorrow. LOL, yeah. 7% up. You heard it here first. All right. Well, God bless all of you, and I will see you on the next one.